Hello, hello. My name is Ednithia, hashtag the Bridge Builder, and I am so excited to be joining you all today virtually from Hilton Head. But listen, I'm here, right? So I just wanted to bring you greetings. I'm so sorry that I couldn't be there in person with you today, but I'm definitely looking forward to meeting each and every one of you at some point, potentially in person. But possibly not, because if you have excellent credit and you're ready to move forward with the home buying process, then unfortunately, I may not be able to meet you. But if you by chance are one of the people that are like, hey, I would just like to get my scores up just a little bit more so that I am able to get a better interest rate or a lower mortgage rate or just, get more house based off of the credit score that you're able to get and get a little bit more for an approval, then I'm your girl. Okay. So again, my name is Ednithia Thomas. I'm originally from the Kannapolis, North Carolina area, moved away for a few years to Georgia during the pandemic. As a matter of fact, I lived in Georgia for 2 years throughout the pandemic. Moved back here a couple of years ago with my 7-year-old son and my mom, and it's just good to be home, right? But now I am making big strides to helping people to accomplish that daunting task of homeownership as well as starting businesses. So I currently volunteer for Square Charlotte. I serve as their Vice President of Community Outreach and Client Services. I own E. Thomas Financial Group, and in collaboration with Freedom Financial Advantage as well as SCH Insurance, I also offer a few other services as well. So with all of that being said, um, I offer tax services, and we're going to focus on credit today. Okay. So if you wouldn't mind giving me just a few minutes of your time, I promise not to bore you. I'm probably going to give you some homework just because that's my thing, and hopefully able to teach you some things today. And then, of course, because I'm not there in person, if you have questions, my contact information is going to be here for you. Feel free to reach out at any point or just let Miss Trina know, and then she can, of course, connect you. So before I move forward, I would just like to thank Miss Trina for the invitation and the opportunity to speak with you today. And again, so sorry I can't be there with you in person. Really does break my heart that I'm not able to be there, but we'll definitely get together soon. So with that being said, let me share my screen and we are going to get started. Okay, so hopefully you are able to see my screen and we are going to get this credit party started. All right. So here's my contact information. Feel free to take a screenshot of this, and I'll also send over a copy so that Miss Trina can pass it out to you. But here we go. So did you know that Americans originated $780 billion in new mortgage debt in the first 2 quarters of 2024. So as so many people are saying that home ownership is not affordable or that it's not something that they can do right now, $780 billion worth of mortgage debt says otherwise, okay? 80.5% of that was issued to super prime borrowers with credit scores of at least 720. Okay, so just FYI, but 3.5% was issued to subprime borrowers with scores below 620. So it is possible, all right? However, we do like to make sure that you are in the best position possible to borrow, all right? And that's based off of Lending Tree. Now, the average credit score to get approved for a home loan is a 620, okay? So somewhere in the middle of there, we want to make sure that you are ready. But one of the things that I always tell people about credit is that intentional budgeting increases your credit. Okay. So we're going to talk a little bit about budgeting um, right now. So let me see here. Here we go. So, one of the things that I always challenge people with is counting the weeks with a dollar. Okay. So, you can save money just by putting aside $1 every single week. That's 52 weeks in a year. But it's not just $1, right? So we're going to add a dollar to that dollar every single week. So the first week we'll save a dollar, the second week we'll save $2, the third week it's three, and then we go on and on from there. Okay. So it's all about planning and planning ahead so that we can, try to get ahead of the game here with this credit thing through saving. Okay. But can I really save $2,500 in a year? Absolutely, you can. Okay. So this objective is alternating $100 and $90, $100 and $90. And then you can even break that down. Maybe you're like, hey, that's a little bit too steep. I'd like to go about this a different way. Just break it in half. Okay. But nonetheless, we want to make sure that you are on track. So this is kind of based off of how you get paid. So if you get paid on a weekly basis, then this is how it's going to go. You'll have 52 weeks. But let's just say that you only get paid every 26 weeks, or I'm sorry, every 2 weeks. Then you're going to be on a 26-week schedule. Okay. So that's $100 one week, $90 a third week. And if you're on a weekly pay rate, it's going to be 50 and 45. So let's go ahead and get to the next one. That was the same slide twice. So here we go. Savings accounts. These are the different types of savings accounts that you can use. And so we do this because you want to make sure that you are putting your money into things that are going to yield a high return. Okay. So you don't want to just put it in a regular savings account that's not going to do anything. That doesn't really excite you much, right? If you're just putting money into an account and it's not growing, we want to see the money grow. So putting it in a high yield savings or Roth IRA or something that's going to bear a little bit more interest than, the couple of pennies that you might get at the end of that savings account that you currently have. So we want to just make sure that we're enticing you to save. So with that being said, I'm going to challenge you. So this is the page that I actually want you to take a screenshot of, and this is some homework, okay? So let's start budgeting. I know you don't like the B word, not that one, but this one, the budgeting, okay? So write down all of your monthly expenses, including any dining, yes, dining and shopping. And then I want you to just make sure that you just whatever you think, whatever comes to mind, I want you to just be really intentional without looking at anything. Just kind of sit down and write down all of the things that you pay each month. And then, or what you project your budget is at this point. And so after you do that, I want you to look at the last 2 to 3 months bank statements and then highlight all of the different categories in different colors. So use pink for shopping, use yellow for your household bills, use green for any money that you're getting in, use blue for eating out, use a purple highlighter for groceries. So whatever it is that you choose, you just want to make sure that you're highlighting them in different colors. And then once you've highlighted all of your expenses by category, then grab a calculator and tally them all up. And then I want you to compare what you thought you were spending on each item to what was actually spent based on your bank statements. And I promise you, it'll change your story. It'll change your life. It'll change your story. No matter how good of a budgeter you think that you are, this little task here always tells the story. So I want you to do this, and then I want you to get back with Miss Trina, and let's have that conversation. So then the next thing that you're going to do is paying off debt. So you want to write down all of your debt. That's car loans, that's credit cards, that's any other kind of loan that you might have. It could be student loans, all things. You want to write that down. But then I want you to also write down the balance, the interest rates, the due date, as well as the monthly payment. And then once you have those, you're going to put them in order from least to greatest based on the debt. And then you're going to begin to understand what that looks like in terms of paying it down. I call it the snowball effect. I don't call it that. That's what it's called. But it's a snowball effect. Okay. And it's basically you're just taking that debt and you're going to start with the smallest thing. And then once the smallest thing is paid off, you're going to take that amount that you're paying monthly and you're going to apply it to the next thing. And I have a whole sheet for that. I'll be more than happy to share it with you all for you to utilize. And then it actually gives you the date that you will be debt free. How about that? And this is especially good whenever you are in the process of planning to purchase a home, because now you can go into the process of getting this, 300,000, 400, $500,000 debt that you never had before, and understand that there is a finite date, like there's going to be an end to that. And then what does that look like? So going in it with a plan is extremely important. So, what is credit? It's the ability of a customer to obtain goods or services before payment, okay, based on the trust that the payment will be made in the future. So I call it an adult credit card. I'm sorry, an adult report card. So we all know what report cards are. If we have children, we're looking at those once every few weeks or every 9 weeks or so. But then as an adult, we get those every month. We're able to see exactly what's happening. So why is credit important? Okay. Your credit matters because it affects your ability to get a loan, a job, housing, insurance, okay, as well as employment and more. So, what are the 5 components that make up credit scores? Okay. All right. So 35% is payment history. Okay. So payment history is, your ability to pay things on time each month, okay? And a little bit of a trick to that, not even a trick, just some background, is that that is based off of you never being more than 30 days late, okay? So if you are paying something and you're a couple of days late, you might get a late fee or something to that effect, but it's not the same as being a whole 30 days late paying something. That's when it's going to hit your credit report. So just remember that 30% is the capacity or amount owed. So how much credit are you allowing to roll over? So when you have a credit card and you have a $300 credit limit, we'll just go with a low number. So a $300 credit limit, and you have spent $200 and you've allowed that to actually hit your credit report, well, now it's going to show that you have a high utilization. Okay. But if you have a $300 credit limit, you spend $200 and then you pay down by 150, now it's going to show that that credit utilization is a lot lower than it was when it was a $200 spend on that balance. Okay. So just kind of keep that in mind as you are using those credit cards, especially coming up on a Christmas holiday, and then, of course, allowing that to roll over into your date of being reported. So keep that in mind. The length of credit. How long have you had this credit card? How long have you had this auto loan? How long have you had that first mortgage, right? And then new credit inquiries, just don't. Unless you are ready to shop for whatever it is that you're running your credit for, and you know that you're likely to get that approval, don't just let them run your credit reports, because basically what happens is you go to the car dealership, they run your credit report, they do one application, but they run it off to 50 different places. And so each one of those can cost you 2 to 3 points on your credit reports. And that's how quickly your scores can drop. Okay. And we can talk about how you can get those inquiries removed. So, types of credit, again, you have installment credits, you have lines of credit, um, you have installment, you have revolving credit, you have, and that's just basically saying that, like a credit card, you spend it, you pay it, you get it back. You spend it, you pay it, you get it back. But an installment loan is like an auto loan. Like, so you pay that monthly amount every month, and then that's going to go towards the interest as well as the principal until it's paid off. Okay. So those are basically just the components of credit, and then how it's all factored. Okay. So then we have something called FICO. Woo, FICO. So a lot of times, and I'm sure that you've heard it, Credit Karma isn't real. Credit Karma is very real. Credit Karma is real because it shows you a synopsis of what's on your credit reports based on the profile itself. So it's only giving you Equifax and TransUnion, and it's giving you something called a Vantage score. And it's just a slightly different scoring model than the FICO. And it's not necessarily something that companies like the mortgage companies and places like that are using to determine whether or not you are eligible for credit. Okay. So it's not that it's a fake score, it's not that it's inaccurate, it's just that it's a different scoring model, and it's going to only give you Equifax and TransUnion. But how many of us know that there are three credit bureaus and the third one is Experian? Okay. So FICO is suggesting that, hey, we're going to use them all. We're going to determine what your credit profile looks like by encompassing all of them, and then we're going to determine exactly what your scores are. And there are multiple FICOs. There's an auto FICO, there's a mortgage FICO, there's an insurance FICO, there are FICOs for just about everything. And of course, that is not the same number that you're going to see on companies like Credit Karma that are only offering a Vantage score. Okay. So I suggest Experian.com, which is going to give you the paid version. Okay. Is going to give you your FICO score, or sometimes you can check with your banking apps and they can also give you your FICO scores as well. So the link between personal and business credit. So basically, your personal credit is, again, your personal report card, okay? But the business credit is something that you can get using your EIN number for the business itself. Sometimes they use your personal credit as a guarantor, and sometimes they don't. So that just depends on who it is that you are applying for credit for or with, and that's how you're able to determine whether or not you have to have a good personal credit score in order to obtain business credit. So, true or false, the credit bureaus are government agencies. So, if you guessed false, then you were right. The credit bureaus are privately owned companies who get paid to report information. Okay. So, if I were a company who wanted to report your payment history, your utilization of your credit, then yes, I'm going to pay the bureaus and I'm going to, basically report that every month. That gives you credibility, but it also gives me an opportunity to extend credit to you. You cannot remove negative items from your credit report. What do you guess? You guessed false. You are right as well. So there's something called the FCRA, the Fair Credit Report Act, and that is what we use. That is what we go by to help in removing the negative items from your credit report. This is also something that individuals can look up and determine for themselves exactly which direction to take to write the letters to the credit bureaus and get these negative items removed from your credit reports as well. So you don't necessarily have to hire people like me to help you. You can obviously do this yourself with just a little bit of research. But hey, if you're the type of person that's like, look, I would just rather have somebody else to do it, then by all means, reach out and we can help you. So here are just a few other things to know. The average credit score breakdown by age group is the Gen Zs are at like a 674, the millennials around a 680. The Gen X is a 699. The boomers are coming in at a 736. And then the silent generation have the higher credit scores typically. Okay. This isn't to say that this is, the way that it is across the board. It's just on average what these scores are looking like based off of age groups. And you can see those ages broken down right over here to the right based off of the different age groups. So, according to American Express, the average credit score by income are as follows. Anybody who has 30,000 or less in annual income has on average about a 590 credit score. And then that next income bracket, 30 to 49,000, 643, and then 50 to 75,737. Again, I know people that have made less than $30,000 and have excellent credit just based off of good budgeting. And so I will even plug that in right here. It's not so much that their income being low is what determines their credit. It's more so their skill and ability to budget well based off of what it is that they are earning. Okay. So the millennial generation is considered to be highly entrepreneurial. Millennials own 7% of small businesses. The Gen Zs are behind the millennials, accounting for 1% of small business ownership. And the majority of small businesses are owned by the baby boomers and Gen X. Which is, basically an illustration of the generation gap in business ownership. And the average age to start a business, according to Forbes, is around 35 years old. And you can see more about those demographics here. And so, why is this important? Because these are the people who have the mindset and the tenacity and the foresight to lean into home ownership and use it for what it's worth. Okay. So, as we wrap all of this up, two things that impact credit scores are cash flow and education, the knowledge base that you need to be able to adequately make sure that you are budgeting and managing money is extremely essential. Financial literacy is a strong passion of mine just based off of my own struggles with financial literacy over the years. And it's not so much the literacy, it's been the discipline. How have I gotten over the budgeting curve and gotten over, making sure that things are paid on time and making sure that I prioritized my spending and the habits that come along with that well. So those are some of the things that I've been challenged with, and those are some of the major reasons why I'm so passionate about helping others. So the two major goals of the majority of Americans is real estate ownership and business ownership. And so those are the two things that I'm most passionate about assisting people with. So what can be done? Well, one is making financial literacy a priority. Okay. How are you prioritizing your skills and abilities to budget and manage money well? Simplifying it so that it makes sense. Everybody's not going to have the same formula. Okay. Some people, it may take them a little bit longer. Some people, it might take them writing it all down. Others, they might use a spreadsheet. Some people might actually need to put it into some sort of an automated system. What works best for you? Okay. And then creating opportunities for people to get the information affordably. That's where I am. That's the space that I'm in. I want this to be affordable, but I also want it to be manageable. Okay, so here are a few tips for improving your credit. Keeping your credit card balances low. And we talked about that. That's 30% of your credit score. So that utilization has to stay low. And again, that's what's being reported. Okay. So keep up with the date that it's due, because being on time is 35% of it. But then 30% is making sure that when it's reported, and you can see that on your credit profiles, as well as your statements for your credit cards, as to when they actually report. And you want to make sure that by that date, that balance is low. Make your payments twice a month. I mean, if you're going to use your credit cards to get the points or, get the cash back or whatever it is that you're using your credit cards for, then make those payments monthly, sometimes twice a month, and it'll trigger an increase to your credit reports and your credit scores. Fluctuate utilization between 1% and 5%. Okay. So that's the amount that needs to be reported. If you pay it down to zero and it just keeps showing that there's a $0 balance, then that's going to report that you're not using your card. And that's just as bad as having a high utilization because it's not serving the same purpose. Not just as bad as having a high utilization, but it needs to serve a purpose. And it's not going to serve the purpose of showing that you're managing money well if you're always paying it down to zero and that's the amount that's being reported. Budgeting your income and expenses, and I think we talked about that in a pretty great deal. Making payments on time, having a good mix of credit, okay? And then stop paying for everything with cash. Whew. For all my cash babies, you want to make sure that you have some credit, because what else are they going to spend? So it's like, not having the homework and then doing it all and then not turning it in. Okay. Same concept. Don't close accounts, because when you close those accounts, then it's going to drop your credit scores, potentially because it doesn't have anything to score. All right. So, an educational resource that I always encourage people to read is Credit is King. So, it offers credit basics, credit scoring models, credit factors, how your actions affect your credit, and then credit myths. And then, of course, some of my favorites, Secure the Bag. He's actually a local artist from North Carolina. Rob Wilson talks a lot about how to form good habits for your financial literacy and your financial management, what type of accounts that you need to have, and how you can split those up to make them work best for you. And then, of course, a classic, Rich Dad, Poor Dad. This is one of the first books that I read pertaining to financial literacy. And then, of course, The Cash Flow Quadrant. And that's just a book that I always encourage people to read because it helps you to identify how to start to segue into financial literacy as it pertains to business ownership as well. Okay. And then finally, the budgetista herself, Tiffany Aliche, because this helps with discipline. All right. So I have come to the conclusion of this quick share. Hopefully, I didn't bore you too much and you are able to take some of what I shared with you today and apply it. And again, if you have any questions, feel free to let me know. But until then, bye bye.